Hi, we're back. Thanks for staying with us. I'm joined in the studio now by my good friend, Mr. Roger Schlesinger. He's otherwise known as the Mortgage Minute Guy in some circles. Roger, good to see you again.
Good to see you, Don.
Well, now, we've been hearing a lot about the housing market. We've been hearing double dip. We've been hearing it's impossible to get a mortgage unless you're qualified to buy the White House for cash. I mean, what's the reality of what's going on in your industry?
Well, the reality of it is, first of all, real estate's pretty good in some areas. It's certainly good in Southern California now, and it's good in other parts of the nation. It's pretty good in parts of New York. It's pretty good in some of the southern areas. It's pretty good in some of the northern areas. So it really has to do with the local reactions. As far as getting a loan, it's not impossible. It's more than impossible. It's not impossible because we are getting loans now, but nothing goes by. I just had one that I've never seen before. They were ready to draw docs, and they said, according to the county recorder, he hasn't paid his April property taxes. So I said, okay, well, let's just pay him to the... No, if he doesn't pay them, the loan's declined if they haven't been paid. I've never seen that before.
You could, even though you wanted to pay them through the escrow process, and they wouldn't go for that.
They wouldn't, if you didn't pay them when it would due, they're not going to do the loan. That's the first time, and I've been in this business going into my third decade, that I've ever heard that happen. So there's an excuse for everything now from every lender, but we do get the loans through. But it's not like, okay, you got enough, do it. No, we don't have enough. We want to see this and this and this and this. So the big difference is the rates are terrific. Instead of doing it in 20 days or 30 days, it's more like 40 days or 50 days. And every once in a while, we get lucky and get one through.
Now, so basically what we're seeing on the lending side then is a supreme CYA, as it were, to use that slang term.
Absolutely.
And so from the borrowing side, it really is just going to require a lot of patience.
Patience is all you need. And if you are a W-2 employee, if you have good credit, if you have decent equity, and you have some reserves in the bank, and you don't have anything esoteric at all, those are the ones we can get right through.
Well, let's talk about down payments, because I know the median down payment in 2006 was about 4%, and the median down payment so far in 2011 is about 22%.
Not true. Not true. Not true. You know, I get so tired of hearing people say, well, you know, they're going to have to pay 20% down. First of all, we do have MI companies, mortgage insurance companies now, who are letting people in with 5% down and 10% down. Second of all, we have FHA, and a lot of people are doing FHA loans 3.5% down. And then we still have the Veterans Administration loans, and all the veterans get in with 0 down. So I think if you took a look at the ones who actually are doing it with applications and financing, it's probably 6 or 7% on a blended ratio.
Well, there's probably people all over the world watching the program right now. They're waiting for your phone number, so how can they get in touch with you?
866-288-0088.
866-288-0088, and you can talk to the Mortgage Minute Guy and find out about your personal situation. Roger, always a pleasure.
Thank you, Don.
Take care.